Hey guys, it's Josh, and in today's episode, we are going to talk about real estate investing with no money. Now, this is one of my favorite subjects. This is how I got started in real estate investing. This is how I'm sure so many of you out there that are looking to get into real estate investing with no money, where you're at. And so I'm going to go over how you can get started. There's so much money out there. I'm going to walk you through the different resources and the places, and stick around till the very end, because I'm going to show you my very favorite technique to make a ton of money in real estate investing and doing it with no money. In fact, I still do it to this day, and you'll find out that most real estate investors, no matter how big, are using other people's money and not using their own money to invest in real estate. It's awesome. So guys, while you're here, make sure to smash that like button below. It really helps us out. If you could leave a comment, let us know if you're new, if you've been doing real estate investing for a while, or maybe just where you live. If you have any questions, definitely, I love reading that stuff. I will respond. And while you're here, click the subscribe button if you get something out of this video, and smash that bell so you get notifications. Here we go. All right, guys, so let's talk about real estate investing with no money. Robert Kiyosaki's talked about this for a long time. This is where I originally picked this up, and the term is OPM. So remember that, get that ingrained in your head, OPM. OPM stands for other people's money. OPM, other people's money. So there's so much of it out there. So once you understand that there's so much money out there, and that should never need to be a problem again. Well, you understand that there's not only so much money out there, but that money is looking for somewhere to go so that it can grow. Okay, that money is looking for a home. And money flows like a river. Okay, it never stops. It's always just going to flow. It needs to move. Money is fast. It moves fast. So you can help direct all that money, all that other people's money that exists out there. And I'm going to break down where that other people's money comes from here in just a second. But once you understand that it's all out there, it's looking for a home, it wants to grow, your job then is to go out there and find good deals. When you find good deals, you find assets that have value in them. Some equity, meaning you're buying it for less than its market value. That creates an opportunity for others people's money to come in and fund that deal and make a return on that deal. So let's break it down. So we start out here. Oh, let me get another color. So we start out, this is us, and I'm just going to draw a dot, okay? This is, I'll say me, okay? And let's say I'm just getting started in real estate investing, and I have no money, okay? This was me at one time. So I have no money, that's why I'm a dot. I'm not a circle because there's nothing, it's just me, just a dot, okay? But around me, guess who does have some money? Friends and family. Now, I'm not a huge fan of borrowing from friends and family. I have done it in real estate deals in the past. I can tell you it can be a little bit stressful. And the reason why, a lot of times friends and family, if they're not investing in real estate themselves and they're not in on the deal, if anything doesn't go exactly as planned, they're going to be stressed. That's going to make you more stressed. That's going to take you out of focusing on getting the deal done. Now look, you shouldn't be doing bad deals. Obviously, that's never anybody's plan, but stuff still comes up. And deals, sometimes deals get extended. They don't close on time, they get pushed back. And if somebody who's expecting their money back with hopefully a little bit of a return on Monday finds out they're not going to get it for a couple weeks and they're not used to investing, that can be stressful. So you can do this if you have to. Just be careful about that. That's kind of a tip to be aware of if you're going to borrow from friends and family. And a lot of times when you're doing that, you're borrowing the down payment from friends and family, which leads me into my next place of finding money. And this is a little bit bigger. There's more money out there in this realm, if you will, and this is, we call this hard money. It's written sideways there, but this is hard money, this circle. This is asset-based lending. These are lenders that will fund deals fast. Oftentimes, they won't even require a lot of money down, but if they do, again, you can go for your small down payment, maybe make a deal with someone here. Or if you've got a little bit in savings, then they're a great option to go right to. So you can pay a higher interest rate. Sometimes you might have to pay a couple fees in the beginning. It's usually not too bad, but they'll fund, sometimes up to 100% of deals if it's a really good deal. If you're getting it at maybe 50 or 60% loan to value. So hard money can be a good one. This is usually for short term. So if you're buying a property to keep, maybe you use this to acquire the property and you later refinance it with a bank. Or maybe you're going to flip a property. You just need to get it funded for a couple months while you can get it resold, and hard money oftentimes is a good option for that, okay? Now after hard money, the next place we have, and you'll see the circle keeps getting bigger, meaning there's even more money. So each circle represents a market, And the bigger the circle, the bigger the market, the more money that it's out, the more OPM, right, that's out there that you can leverage for your real estate investing deals. So we've got me, then we've got friends and family, we've got hard money, then we've got institutional money. Institutional money. Okay? Institutional money. Now, what is institutional money? Institutional money can be like conventional financing. It can be commercial financing. This is banks that are actually lending. They're in the business of lending on real estate. And you're going to usually pay a lower interest rate than you would pay with hard money, or definitely to anybody that you're borrowing the money from on a personal level deal. But institutional money can be great to cash flow properties long term that you're keeping as rental properties that you want to get paid off. And there's a lot of institutional money out there. Typically, if you're going to use like conventional financing and stuff like that, and use your personal name and credit, you'll usually get capped off. Right now, I think it's about 10 properties. Above that, you'll start having to look at commercial. Commercial is actually easier. They still might look at your credit and your history, but they're going to look at a lot similar to hard money. They're going to look at what the loan to value is, what the cash flow is, the rent ratio. So what they'll do is they'll say a lot of times they want it to be like 1.25 to 1.4, meaning you take your what the debt's going to cost you, the loan, the principal and interest, then they add to that taxes, insurance, and then they factor in for vacancies, repairs, and property management. And then they want that after all that, let's say you're making $1,000, they want to be at 1.25 to 1.4 what you're getting for rent to what the loan costs you. So if the loan costs you $1,000, they want you to be making in rent, and that's $1,000 after repairs, vacancies, management. They want you to be getting $1,250 a month to $1,400 a month in rent. In other words, you're making 1.25. It's how much cash flow essentially you're making after your expenses, and that's the ratio that they want to see. Okay, now after institutional money, we get into the sea of money. This is where there's so much other money. I draw a big old circle, and I apologize, guys. My circles are not very good here. But this is the markets. Markets. This is a huge place. Okay? This is why people set up hedge funds. They set up a fund so they can do tons and tons and tons of deals as a big company. They go and get their money from the markets. So within the markets, think of like the stock market, things like that. There's a ton of money in there, right? And it's not only everybody just invests, okay, I'm going to go buy a stock from Nike. A lot of people say, I'm going to invest with, my employer matches a certain contribution if I invest it with them, and then they're investing it with other people who then ultimately put it into a fund, and it's getting ultimately invested into companies, real estate, index funds, etc. So a lot of what makes up the markets, guys, and this is the same for the stock market, is retirement accounts. Retirement accounts. Now, so many people out there have big money in their market retirement accounts. In fact, a lot of people you probably know here, friends and family, probably have a ton of money in retirement accounts. So you can tap into this. There's what is called a self-directed IRA. So we've got our self-directed IRA. This is where, let's say somebody is a firefighter, they have over $100,000, they've been a firefighter for a while, they've got over $100,000 in their retirement account, and they want to start investing in real estate, but they can't because it's tied up in their fund, which is in stocks and stuff like that. Well, they can pull that out tax-free, put it in a self-directed IRA. Now they can lend that to you for your real estate investing deals. And as long as they put the money back into the self-directed IRA, that can grow tax-free. As you begin doing deals and start making a lot of money, you can do what's called create a Roth IRA. And this works similar. You're going to build up, instead of having a savings account that you're going to get taxed on every time you do a deal and make money, put it in a Roth IRA. Now you can borrow from your Roth IRA to do your deals. And same thing, when you pay it back, there's no taxes on it. It can grow tax-free, so it can snowball growth over time. It's incredible. So guys, there's so much money here. Think about everybody out there that's got a retirement account. It's pretty much in the stock market. But you can get the knowledge, understand self-directed IRAs, get them to pull that money out of the stock market so they can lend it on your real estate deals. And look, they're probably getting a couple percentage points in whatever fund it's in. So if you do even a rate that's maybe lower than institutional money or conventional money, definitely lower than hard money, they're still going to be happy because it's still going to be better probably than the stock market rate they're getting right now. There's so much money out here, guys, that you can literally create funds and just raise money for this. Other funds will invest into your deals if you're in this. So the markets, there's so much money out there. It's insane. And once you realize that there's so much money out there, it's looking for a place that it can go that's a good, safe return so that it can grow itself. You'll realize that literally money should never hold you back. There's no limit to how many deals you can do in terms of capital because you can always use other people's money. The money will show up if the deal's right. So my last point, guys, is that ultimately, since all of this is all about finding a deal that's good enough that people would lend on it, good enough banks would lend on it, good enough markets would lend on it, if it's that good, then really the gold is in finding the deal. So you could do all these things, and for holding properties, you're going to want to do a combination of these. So if you're buying properties for passive income, rental properties, etc. But if you're looking to just get paid quick, do your first deal, make some consistent income, you can do real estate wholesaling. Wholesaling, it's amazing, guys. And what wholesaling is where you put a property under contract, hopefully at 50, 60, 70% of its value, and you sell that property. So let's say, hang on, let me erase this. Okay, so let's say we buy a property for $200,000. Property's worth, I'll say purchase price. Hope you can read that okay. Let me get a different marker. Second at that. All right, so $200,000 is the purchase price, okay? Its value is $300,000. And I can go do all those things we talked about to borrow money for this deal, but if I want to get paid quickly, rather than flipping it, which I'm going to have to come up with the down payment, I'm going to have to pay interest, I'm going to have to pay closing costs, I'm going to take risk, I'm going to have to do repairs, I'm going to do all this stuff. Let's say the house is vacant, seller's ready to close next week, and I just want to get paid next week. Well, I go find somebody who wants to buy this property, a fix and flipper, and I can click this video right here. I can help you get an instant cash buyers list that when you get a deal like this, you can sell it in a day. And so let's say I sell this property I wholesale it for $235. And with no money, quickly, I make I make $35,000. The difference in the $200 purchase price and the $235 that I sell it for. The buyer's happy to close right away with cash because they're getting $65,000 in equity. I'm happy because I get $35,000 right away and I can go out and look for my next deal. And I can build up capital this way, and then I can start buying passive income properties too. It's amazing. So if you guys want to learn more on wholesale real estate investing, this is something I do. I've done for over 10 years in addition to being a broker, and I've done hundreds of fix and flips, but I've wholesaled thousands of deals, and I also own a lot of rental properties. Wholesale is the key, guys, I'm telling you, because this is where you learn to acquire properties with equity, whether you're going to keep them and get funding and do all that stuff, or if you're going to wholesale them for a quick payday. So I like to do both. This pays for my lifestyle, and on the other end of the spectrum, I use other people's money to leverage the money I make from this and even more money to buy even more rental properties that then bring in cash flow, and that has so many advantages. So click the video right here, and I can show you more about wholesaling.